Welcome to the deep dive. Today, we're really getting into it with one of India's financial titans, State Bank of India, SBI.
That's right.
It's July 4th, 2025, and our goal here is pretty straightforward. We want to unpack what makes SBI tick as an investment. We've looked at the sources you shared, and we'll pull out the key stuff so you can quickly get a handle on it.
Sounds good.
And just for context, right now, SBI is trading around 840.
Okay.
So let's start right there. Why is SBI considered such a giant? What's the initial frame we should put around this?
Well, the first thing to grasp is SBI isn't, just another bank on the street. It's India's largest public sector bank.
Right. The public sector part is key.
It is. It means it's backed by the government of India, and that fundamentally changes things. It's often called basically the spine of India's banking system.
The spine of India. That's a strong image. What does that actually mean in practice, beyond just offering loans and accounts?
It means incredible reach, for one, stability for another. We're talking everything from your standard retail banking, savings accounts, loans, to huge corporate deals, investment banking, treasury services. It's comprehensive.
And the scale is just massive. Right?
Oh, absolutely huge. The market cap is around, 7.5 lakh crore?
7.5 trillion rupees.
Exactly. So it's a proper blue chip, large cap stock, and very much a public stock, embedded in the nation's financial fabric.
Okay.
And what's fascinating, going back to your question, is how this sort of foundational, almost quasi-governmental role shapes how people see it as an investment. It's not just about profit, it's about national stability.
Right, that makes sense. It carries a different weight.
Definitely.
So how does that foundational strength, that spine status, show up in the numbers? Let's talk performance.
Okay, the technicals.
Yeah, the sources give us some CAGR figures. Compound annual growth rate. Over 5 years, it's 18%.
Pretty solid.
Over 3 years, even better, 22%. But then the 2-year CAGR drops to 12%, and just the last 12 months, it's 9%.
Right.
So you see strong history, but then this tapering off, maybe. Is that slowdown from 22% down to 9% something to worry about?
Well, worry might be too strong a word for a giant like SBI. I mean, you often see consolidation after strong runs.
Okay.
And what's driving the current trend, which is, mildly upward, is actually quite positive for a bank.
What's that?
Stable NPA levels, non-performing assets, that's crucial. And consistent profitability.
Can you quickly unpack why stable NPAs are so important for a bank, especially one this size?
Sure. NPAs are basically loans that aren't being paid back. If that number is high or rising fast, it eats into profits and signals risk.
Got it.
For SBI, stable NPAs mean asset quality is holding up, which reflects, well, not just on the bank's management, but arguably on the broader economic segments it lends to. It suggests underlying stability.
So it's a health indicator for more than just the bank itself.
Exactly. It's a foundational pillar, like we said, which actually leads us to something really interesting in the sources.
I think I know where you're going. This part really jumped out, the risk score.
Yes. The unique risk score assigned to SBI.
It's 100 out of 100, on a scale where 1 is riskiest and 100 is safest.
The perfect score.
Yeah.
And the explanation given in the source material is, frankly, unforgettable and a bit funny.
Read it out. It's worth hearing verbatim.
Okay, it says, and I quote, "If SBI fails, we're not talking about market risk anymore. We're talking nuclear war, currency collapse, or alien invasion. If you lose money on SBI, trust me, money has stopped matter altogether. So yeah, as safe as they come."
Slight chuckle. Nuclear war or alien invasion, that's quite the endorsement of safety.
It's extreme, right? But it highlights the perception.
But let's be real for a second. Even with government backing, in today's, volatile world, are there any scenarios short of aliens where that kind of safety could be tested? Or is it truly in a league of its own?
Well, that raises the core question, doesn't it? Why is any stock considered this safe?
Yeah.
It comes back to that government backing and its systemic importance. It's woven into the fabric of the Indian economy.
Too big to fail, essentially.
That's the underlying message, yes. The risk isn't zero. No, investment is truly zero risk, but the nature of the risk is different. It's perceived less as market risk and more as, existential risk for the whole system.
So for you, the listener, thinking about this, what does that level of perceived security actually mean? Does it make it an automatic buy, or does that kind of safety come with its own trade-offs, maybe lower growth potential?
That's the million rupee question, isn't it? That perceived safety is almost unheard of. It makes it a unique kind of anchor.
Okay, let's bring this back down to earth then. Strategy time. How should someone actually approach investing in SBI based on their goals?
Right, let's get practical.
For the long-term investor, say someone with a 5-year time frame, what's the thinking?
Sources suggest it's ideal for them. You get stability, solid fundamentals, and reasonable potential for upside.
And the strategy?
The advice is to accumulate gradually. Don't pile in all at once. Buy more on days when the price dips, on correction days.
Why is that gradual approach so important for long-term holders?
Well, it smooths out your average purchase price. You're not trying to perfectly time the bottom, which is, let's face it, nearly impossible.
True.
It reduces the stress of making one big bet. You build your position patiently, taking advantage of volatility instead of fearing it.
Okay, makes sense. Now, what about someone with a shorter view, maybe 1 year?
For that time frame, the sources see potential for SBI to reach the 900 to 920 zone. But there's a condition.
Which is?
Banking sentiment needs to stay positive. If the overall mood towards banks is good, SBI could get there.
And the strategy for this 1-year play?
Entry near the current levels, maybe around 800, looks sensible according to the analysis. But crucially, use a disciplined stop loss. Manage your risk.
You mentioned banking sentiment. What exactly drives that? How does an investor gauge it?
It's the overall market feeling about the health and future of the banking sector. It's influenced by things like interest rate expectations, economic growth forecasts, loan demand, regulatory news.
So broader economic factors.
Exactly. Positive sentiment generally means investors are optimistic, which lifts bank stocks. Negative sentiment does the opposite. You watch financial news, analyst reports, overall market trends.
Got it. Okay, now for the really short-term folks, the 3-month traders.
Right, the active traders. The sources note that SBI often trades within a range, typically between, say, 800 and 880.
So range-bound.
Often, yeah. So the strategy here is much more tactical. Use technical indicators tools like ANZD or RSI.
These help you spot potential turning points within that range.
Precisely. They help identify momentum shifts, or if the stock is potentially overbought or oversold in the short term. It's about catching those swings.
So definitely requires more active monitoring.
Absolutely, not a set-and-forget approach.
Now, there was also mention of a specific hack or technique, particularly for swing traders or maybe even those long-term accumulators we talked about.
Ah, yes, the low-stress accumulation idea.
Explain that one.
It's simple, really. Instead of waiting for big drops, you buy in small, manageable chunks every time the stock dips by, say, 2 or 3%.
Okay. Frequent small buys on minor dips.
Exactly. The benefit is your average buy price stays really flexible, constantly adjusting.
And the advantage of that.
Even if the market gets choppy or SBI drifts down for a bit, your average cost isn't locked in at a high point. It makes it easier to potentially exit with a profit when the stock bounces back, even if it doesn't return to its absolute peak.
So it keeps you in the game without needing huge recoveries.
Right. It's about control and lowering stress. Don't rush in with your whole amount. Let the price come to you. Stack it slowly. High control, lower stress investing.
That's a very practical takeaway. Okay, so to wrap up our deep dive on SBI, it seems the consensus is we're looking at a national powerhouse, investor-friendly in many ways, and according to that risk score, almost bulletproof.
Yeah, but the key thing to remember, I think, is that this isn't just another stock. It really is perceived as the backbone of Indian banking.
Solid foundation.
And the overarching advice seems to be stay calm, whatever your strategy, stay diversified, don't put all your eggs in one basket, even one as seemingly safe as SBI, and let the markets do their thing.
Good advice. And just one final thought to leave you with, something to mull over.
Okay.
Given everything we've discussed, SBI's spine of India status, that near-zero risk score, its sheer size and government backing, what does the health and stability of an institution like this tell us, more broadly, about the economic outlook and resilience of a country like India itself?
That's a big question.
It is. Something to think about beyond just the stock price. Thanks for joining us on the Deep Dive.